Hello, everyone, and welcome to the August Protecting Your Profits conference call. Obviously, I am not Zach Myers. Zach actually left our organization a couple weeks ago. We wish him really well, and we are filling his position. But in the interim, I'm going to be taking care of the markets and management information. I'm Jayne Sebright. I'm the director at the center, and by no means am I an expert in markets and milk pricing. So I invited for this call somebody who I know is. I want to welcome Jacob Thompson to our call today. And Jake, why don't you start out by telling us a little bit about yourself?
Well, thank you very much, Jayne. My name is Jacob Thompson. I live in Lancaster County, Pennsylvania. I work for Land O'Lakes, Inc., and I serve our Land O'Lakes membership here in Pennsylvania in the Northeast region, as well as in California. Our team is a group of people across the country that serve our membership through contracting and risk management services, cost of production, and we are also all licensed insurance agents for dairy revenue protection. We serve mostly our internal Land O'Lakes members, but we do have a few individuals that also do work indirectly or directly with non-members across the country as well. Thank you for the invite, Jayne. Glad to be here.
Glad you're here too, because you make my job a lot easier than having to explain this all myself. So today we're going to talk a little bit about current markets, supply factors, export numbers, where the class 3 and class 4 prices, and just with a little bit about the dairy margin coverage and dairy revenue protection program. So looking at our first bit of information, let's talk about the July milk production numbers. So Jake, talk a little bit about what's going on in the US right now.
Yeah, I think the biggest takeaway from the July milk production report was a couple of the large producing states had some very significant negative year over year growth. And I would start off with California with a negative 5.5%. And a lot of that was probably related to some very hot weather in California through July and some of the ongoing stress that has occurred for those dairy operations. And as well as I think that Texas and New Mexico was down pretty significantly with some positive numbers across the upper Midwest and in the state of New York. Jayne, do you have any comments on Pennsylvania? What do you think?
Yeah, so nationally, our milk production came in right at 19.075 billion pounds, down about 0.5%. Pennsylvania's milk production was around 829 million pounds, down about 0.8% year over year. When you look at our state, I think we still continue to struggle with milk production per cow. We're actually pretty far down on the top 23 producing states. When you look at our production per cow, we're actually 250 pounds behind the largest or the average US milk production per cow and 550 pounds behind the highest milk production per cow state, which is Michigan. We also lost 1,000 head from a year ago, but we are holding steady in our herd size at with a seventh consecutive month in a row at 466,000 cows. Incidentally, the milk production per cow, that is something that we continue to struggle with here in the state, understanding why it does sit so low. There's definitely herds, both large and small, who do a very good job with milk production per cow in our state, but we do have 5,000 farms. So we have 5,000 farms that contribute to that. Jake, why don't you talk a little bit about dairy cow slaughter numbers and where we're at with them?
Yeah, dairy cow slaughter numbers coming in there at June at 255,700. And, I think anybody that's in the dairy industry and is milking cows realizes what those live coat values are right now. And they've been really, really strong. Obviously, they've been strong because of a herd reduction, out of the Southwest a year ago with some really dry weather there. But, you can see the numbers. We're up 10% year over year, a 2.6% gain during May. And year to date, we're at 1.618 million, almost 1.619, which is a 6.4% growth year over year. And, this is a good thing for dairy farmers. If they're looking at some cash flow challenges, they know that they're going to be able to sell one of these cull cows and get really good value. The one thing that I would say as we're recording this today, just yesterday, a new report came out saying that dairy cow slaughter for the week of ending August 12th was 61,900, and that was up 7.8% from the week 32 in last year, 2022. And over the past 4 weeks, we're up 7.6%. So we're continuing this same trend, as we move forward through the year. And I don't see this slowing down whatsoever. So some really good numbers there and some really good values coming back to dairy producers.
So Jake, let's look a little bit at July dairy product stocks and the June non-fat dry milk numbers. Do you want to talk a little bit about what we're seeing with that?
So as we look at some of the numbers here, we had 331.6 million pounds of dairy product stocks on the butter side, which was a 5% year over year growth. Cheese coming in at 1.488 billion. That was down, 2% year over year. As we look at non-fat dry milk at 296.5, negative 4% year over year, with a negative 1.3% from May. One of the things is we had some decent, strong milk production, as we move through the spring and the summer. So there's a little bit of carryover there as we're looking at some of these product stocks. I think it'll be interesting with some of the heat stress that we've had over a number of the states across the country that are major dairy producing states on whether this number will shrink as we get into August and as we move forward. We'll continue to monitor that. On the butter side, we have not been really competitive on the world price market versus GDT, and so that could be actually limiting our exports a little bit, and maybe contributing to our increase in product stocks as well.
Yeah, you're jumping ahead a little bit. Jake,
Yeah.
why don't you talk about what is going on with dairy product prices and what we're seeing with the movement in the CME right now?
Yeah, so there's been a lot of movement on the CME. I mean, these are CME prices, not spot prices, but man, there has been a lot of movement on the spot prices too. But let's start off with July dairy product prices on butter, 256 versus 296 a year ago. GDT at $2.13. Well, currently the butter price is trading a little bit over $2.70, with GDT still in that 210 range. That's a pretty big gap. We'll have to watch that. The American consumer has been very resilient on buying their fat, from the dairy side. So we've been able to maintain that, and we'll have to see what the drawdown is going to be and the prices will be as we build up into the fourth quarter for Thanksgiving and Christmas holidays. So we're going to watch that one pretty closely. That could be a wild card for us on pricing as we get past the fourth quarter holiday buying rush and into cooler, colder weather, which increases milk production and components into early 2024. CME block cheese, spot prices surprised everybody through June and July. But we came in with $1.62 versus $1.92 year over year. GDT was at $1.79, EU at 203. But we bottomed out on cheese, $1.35 on the spot market, and that was correspondingly pulling our class 3 prices down. And that's really what drove some of these really weak milk checks, for June and July. So hopefully some of that buying power and buying interest in the cheese market is going to hold those back up and push that forward through the rest of the year and give us some more value benefit, in the milk check as we look at the rest of 2023. Non-fat dried milk has been another frustration, I would say, for the industry, for the first part of this year. There was a lot of people across the country that had budgeted in, non-fat skim milk prices in that $1.30 range. And we just blew right through those. And the spot market has been trading right around $1.10. GDT's at $1.13. Non-fat dried milk, here in July was at $1.12. But, the concerning thing with non-fat dried milk, if we stay at these low prices, will that eventually, have a negative impact or influence on our other commodity prices of butter and cheese and maybe pull that down? We'll have to watch that. Yeah, so non-fat dried milk, July dairy prices at $1.12 versus year ago $1.66. This is a big drop. And GDT, Global Dairy Trade Auction, trading at $1.13, European Union trading at $1.08. The entire marketplace, the entire world is feeling the impact of these lower skim and whole milk powder prices. And a lot of it's being driven by a lower purchasing volume coming out of China And with their demand being low, that has negatively brought down the world prices for everybody else. I would say that Mexico and their strong peso has been a lifesaver for the U.S. dairy industry. They have bought in a lot of product, and they've actually supported our prices probably more than we can probably expect. And so that has been a very strong benefit for us this year.
So you want to share just a little bit about what's going on with dairy product production? We're seeing butter and cheese both up a little bit, and non-fat dry milk up as well.
Yeah, it's not surprising when you make more butter, you're going to make more powder. And so butter at 163 million pounds, up 2.3% year over year, but down 16.4% for May. Correspondingly down below 183 million pounds of non-fat dry milk, which is up 8%. Those two things go hand in hand. Powder is the byproduct of butter manufacturing. The same thing with cheese. The byproduct of cheese is whey, whether it's dry whey or liquid whey. And with cheese here for June dairy product production, at 1.171 billion pounds, up 4.4% year over year, but down 2.8%. We'll have to watch that, with the heat and the stress that comes with lower components and lower milk production through the summer. So July and August will be interesting to see if they continue to be weaker as we move forward. And as well, we're going to be moving into school months, and bottling, activity is going to pick up as we pull more milk into the bottle to send to the schools.
So let's talk about total dairy product disappearance and what's going on here. Butter is up 27% from a year ago at 185.9 million pounds. Cheese is up a little bit at 1.099 billion pounds, and non-fat and skim milk powder, they're actually down in disappearance at 226.9 million pounds. So Jake, what's going on with disappearance? What do you see as the trends with disappearance right now?
Yeah, the big thing here that we need to look at is just the exports. If you look at the export numbers, specifically for butter and total cheese, those are some pretty negative numbers. But look at domestic usage on butter and cheese. The American consumer is still really enjoying dairy fat and protein. And they have been very resilient with their purchasing dollars, pushing it towards dairy products. So that has been phenomenal. That's really helped prop up our local markets and our local milk prices because of their local demand for our homemade products here in the U.S. Exports, on the other hand, they are down. Part of that, is, directly related to maybe some higher prices in the past, but also, it's the overall economy negatively weighing on their ability to have extra disposable income for additional dairy, fat, and protein in their diets. We see across the country extremely high interest rates, not only here in the United States, but around the world. We see inflation, not only inflation that our farmers have to deal with, but the consumers in the United States and the rest of the world. I have a brother-in-law in London, and he had told me that most of Europe and the UK are on floating rate interest rates. And so his mortgage went from like 2.25% to 6.5%. And that was a very large additional chunk of money that came out of his budget. It was just coming. So those type of things are impacting, everybody across the world. It's no different. It's just not a local US thing. It's not a local UK thing. It's everybody. And I think that's directly one of the signs of what's occurring with some of the exports. It's just not the US that's struggling with exports. It's the rest of the world as well. China has been one of the big pullbacks there. And as we look at exports for non-fat dry milk, here in the United States, I think I mentioned it just earlier. Mexico has been really, really beneficial to our industry. They've had a very strong peso that's worked in their favor on their purchasing power, and they've imported quite a few dairy products from the U.S., and that's been a very big benefit.
So let's look a little bit at exports right now. Jake, 485.7 million pounds exported in June, down 13.7% from a year over year, and the lowest on record. Talk a little bit about what's attributing to, you did talk a little bit, but anything more that you would talk about that's what's attributing to that decline?
Yeah, I don't know if I really have a whole lot more. I mean, some of the numbers here, you can see that we've got the lowest June on record since 2019. Um, you know, we had some pretty low cheese prices that did stimulate some demand, so we're probably going to see a bit of a rebound. You know, we are going to hopefully see some of these numbers improve, over the next couple of months as new export data comes in that can be analyzed and, pushed back out to our system. But I think that we're going to have to wait and see, just how much additional spending income that each of these individuals have across the different countries and where they're at. China's going to be a wild card. I think that there's been a little bit of a talk about it in the industry that China was really heavy in milk production and overproducing with very low margins, but they weren't culling as heavily as most people expected. And all that over milk production has gone into the production of powder. So they're building domestic inventories, and that was reducing their need to actually import powder. So we'll see how long that lasts. And I think we'll have to wait and see exactly what interest rates and exchange rates will impact, purchases as we move forward.
So that's closed before we go into the risk management programs, just to look at class 3 and class 4 prices right now. These are based on August 23rd closing. What do you see on this slide, Jake?
Oh, what was the closing date? July 31st?
No, August 23rd,
Oh,
so two
August
days
23rd.
ago.
Yeah, okay. I was wondering, it's
Yeah.
like we missed, well, we have a bit of a rally there, 5-year average closing price, but we had a massive rally in the class 3 and class 4 market through a good portion of July, which was extremely needed. Um, we had plenty of stress across the industry with I believe it was 1377 was the closing price for July on class 3 price. And that really has impacted farm profitability for dairy farms across the country. As we look at, the current class 3 and the class 4 prices, you can see that we have definitely, had an elevation off of those lows. We've seen a rally in the cheese market, which directly, provided some of the rally in the class 3 market. And we're getting closer and closer back to, what I would call, some reasonable numbers, especially as we'll see in a slide or two, some of the margin after feed costs, we're getting back to what would be acceptable. But yet at the same time, the stress has been tremendous here for a number of months within the United States, across the country, regardless of where your farm is located. But current class 3 prices have come up. We continue to see a little bit of appreciation. I hope it's sustainable and not just a fourth quarter school milk draw run up. I hope it's sustainable. But right now, this may be providing a few opportunities for risk management, coverage because of some of these minor rallies that we've been seeing here recently. And class 4 has done the exact same. As you can see, 12-month class 4 average is at 1880. It's $1.45 above the 5-year average. And I'm not sure how you calculate your 5-year average, if that's current month back 5 years, or I know that my 5-year average, the class 4 is about 1694. And I believe the class 3 average is 1775. So they're pretty close, the way we calculate them. But that 12-month class 4 average, those are some good values. And my concern is if butter falls off and goes closer to the global dairy trade value for butter, we could see that number come down pretty significantly, because powder is so weak and is not providing a lot of value benefit right now.
Yeah, and Jake, one of the things you had mentioned when we were talking before was how beneficial a higher class 4 price is to Pennsylvania producers. So you want to talk a little bit about that before we move
Yeah.
into this?
So
Yeah.
that's a really good conversation piece, Jane, because not so many years ago, class 3 was the driver for federal order 1. And then there was the federal order reform change where we went from the higher of to the class 1 mover price setting to the average of class 3, class 4 skim milk price plus 74 cents. But today in federal order 1, approximately 60% of your milk check is driven directly by the class 4 value. So you think about it, 50% of the class 1 price is driven by class 4 price. Class 2 price is 100% driven by class 4, and then class 4 price is obviously class 4 price. And so if you add up the percent utilization within Federal Order 1, 60%, sometimes more, of your
Mhm.
entire milk check is directly influenced by class 4. And so it's a really good thing for Federal Order 1 and all of our producers in Pennsylvania to look for and wish for a higher class 4 price than a higher class 3 price.
Yeah, and I think that's a really good point. So let's go into the dairy margin coverage program. This has been a really good program for dairy farmers this year. You want to talk about what it did in June and what we're
Oh,
looking at for the rest of the year?
yeah, Jane, I tell you, this program has been probably, well, by far the best program for the money spent of any risk management program on the table for any dairy producer across the country. June margin was $3.65, which triggered a $5.85 indemnity payment if you were signed up for the max 950 margin coverage. And give you a little perspective there on just how well this program has done. January had a payment of $1.56. February came in at $3.31. March came in at $3.42. April at $3.66. May at $4.67. Here we have June at $5.85, and July is expected to probably be at $6 or maybe a little bit over. Phenomenal value on this program. As we can see for the month of June, I mean, this triggered basically $4,630 per million pounds of protection, or $23,150 at the 5 million pound cap. Feed costs did decrease by about 22 cents to 14.25 a hundredweight compared to May, and the U.S. all milk price did fall, $1.40 to 17.90, where May came in at 19.30. I would imagine that all milk price will drop more significantly than the feed cost will drop, and that's where we'll have a approximate or a margin that'll probably be in that 350 range, and that will potentially trigger a $6 approximate indemnity payment. So quite significant, great value. I hope that every dairy producer that's listening to this program, this is an easy decision. Everybody should be signed up. Great, great program.
And then when you look on there, the USDA's decision tool regarding the DMC, you'll see that they're actually projecting payments through November. Not as significant, definitely July will be the most significant. And then August comes up a little bit. September, October, November are all above $8. And then December is just above the 950 level, which would result in no payment, but a very, very good program this year. So Jake, let's talk a little bit about dairy revenue protection. I know you guys talk a lot about this program and you've actually sold some policies. So what's it doing right now? And let's look at class 3 and class 4.
Yeah, another great program. Obviously, it's a little bit more expensive than dairy margin coverage, which is a flat 15 cents across your milk that you cover. But obviously, this is a little bit more expensive, but another great program that gives you tools and options to utilize, especially if you are larger than the 5 million pound annual cap for DMC. Just for reference, I think back in the second quarter, which would have been April through June, which just wrapped up, we were finalizing payments and worksheets. Almost every single producer that had taken a position for the second quarter that worked through us. And I would imagine this would be across the country, regardless of who you worked with or where you were located. There was some nice payments. And that's just because, number one, timing does play a factor, in whether this program does pay out. But this program is milk insurance. It doesn't guarantee you profit, but it helps to protect you from a disaster. That's what insurance really does. And as you can see here for class 3, some of the premiums, especially the upfront quarter and the fourth quarter here of 2023, the current coverage cost is 19 cents per hundredweight. Gives you a protection, level of $17.04. And you can see that it ranges from 19 all the way up to 49 cents all the way through the fourth quarter of 2024. We don't know what's going to happen in the future. We are all working, our best to identify the trends that are going to have influence on this marketplace. But I would say that, these prices are just slightly below that 5-year average of class 3 price. And so if we do have strong milk production growth through the fourth quarter and first 2 quarters of 2024, at the same time, if we have weak demand or potential recessions within the world, these prices could look pretty good. But it is definitely a more expensive program, but it is one of the better programs that is also available for consideration if you exceed the 5 million pounds annual cap the DMC provides.
And then when you look at class 4 in the dairy revenue projection, where is
Yeah.
it sitting?
Class 4, very similar premium structure there, as we look at the next 5 quarters, from fourth quarter 2023 through the fourth quarter of 2024. You will see an interesting number change there, right? If you look at second quarter of 2024 at 54 cents, and then the third quarter drops all the way down to 42, and then the fourth quarter jumps up to 52. So a little bit of anomaly there with pricing, but I think that's like really looking at the price risk of class 4 market butter and powder in the second quarter, which is typically spring flush for the majority of the entire United States. If we have additional milk, there could be higher risk on that actual quarter. That's me speaking, from my opinion. I'm not really sure on that, but I think that those numbers, look pretty good on a 5-year average. It really depends on, do you think there's more upside potential in the market, or do you think there's more downside in the market? Currently, my 5-year average price for class 4 is $16.94, not including any of the numbers from 2023. So if you look at those coverage levels, $16.94, these are all $1 a hundredweight higher than that. So they could be some reasonable values for consideration for dairy producers, within the state of Pennsylvania.
Yeah, and just for those who are listening and not looking at the slides, class 3 coverage levels offer a net floor of in the $17 range, and class 4 currently in all of the 5 quarters offers net floor range between $17.93 for the fourth quarter of 2024 to just over $18 in the other 4 quarters. So like you said, they're definitely right around the 5-year average, and we don't know what's going to happen. So they do provide that floor coverage to protect from any significant downturns. So that's actually the end of our PYP. Thank you so much for joining me, Jake. I really appreciate it. Hopefully, those listening really learned a lot from your perspective, and I do appreciate you being that expert for this, and might ask you to do it again next month if I don't find anyone to replace Jack or Zach. So thank you so much for joining us, and thanks to everyone who joined us today. And if you are listening through Amazon, Apple, or Spotify, you can get the slides if you go on our website and go to centerfordairyexcellence.org/PYP. So thanks again for joining us, and have a great month.
Thank you.